In the crypto world, high-yield programs like Centrium promise compounding returns that can make your head spin. Just think, a daily income compounding at 2% or more. That's over 700% in a year. It's an investor's dream. So what exactly are these high-yield programs? High-yield programs, or HYIPs, are investment schemes that claim to deliver extraordinarily high compounding returns on investment. They operate in various markets, but we're seeing a surge in the crypto space. Programs like Centrium are at the forefront, wooing investors with the promise of daily income returns that defy traditional investment norms and compound over time. These programs work on the principle of using new investment to pay off the earlier investors, creating a cycle that keeps the system running. The allure is undeniable. In a world where traditional investments are struggling to give even single-digit annual returns, a program promising daily compounding returns sounds like gold mine. The increasing popularity of these programs is no surprise. The volatile nature of cryptocurrencies, combined with the potential for high compounding returns, makes them attractive to risk-takers. But it's not just the thrill seekers who are drawn in. Even cautious investors find themselves tempted by these potentially lucrative schemes. The promises these programs make are indeed enticing. A steady stream of compound income, financial freedom, and the chance to be part of the exciting world of cryptocurrencies. They paint a picture of a future where you can sit back and watch your investment grow exponentially. But the rub: high returns come with high risks. The crypto market is notoriously unpredictable. Add to that the structure of these high-yield programs, and you have a recipe for potential disaster. So, we circle back to the question that brought us here. Are these high-yield programs like Centrium, promising compound returns, a gold mine, or a mirage in the desert? The promise of high compounding returns is tantalizing, but the risks are equally daunting. But are these programs too good to be true? Let us delve deeper. Because as cautious investors, we must not be swayed solely by the promise of high compounding returns. We need to dig beneath the surface, understand the risks, and make informed decisions. After all, in the world of investment, the only sure thing is that there's no such thing as a sure thing. So how do these high-yield programs actually claim to work? Well, let's delve into it. High-yield programs like Centrium are essentially investment platforms that operate using blockchain technology. They claim to generate substantial daily returns, often averaging around 2%, by leveraging various strategies within the expansive world of cryptocurrencies. The operational model of these programs is quite multifaceted, involving a combination of trading strategies, staking, and yield farming. Let's start with trading strategies. High-yield programs often utilize a mix of automated and manual trading techniques. Some platforms even tout the use of artificial intelligence and machine learning algorithms to predict market trends and execute high-frequency trades. This, they claim, allows them to capitalize on the volatility of the crypto market and generate significant profits. Now let's move on to staking. Staking, in its simplest form, is the process of actively participating in transaction validation on a proof-of-stake blockchain. By staking their coins, investors are essentially locking them up in a network to maintain its operations and security. In return, they're rewarded with more coins. High-yield programs claim that by pooling together investors' funds for staking, they can generate a consistent return. Next up is yield farming. This is a relatively new concept in the crypto world, which involves lending out cryptocurrencies in return for interest. High-yield programs claim to use yield farming strategies to lend out investors' funds on various DeFi platforms, earning a return in the process. These are the key strategies that high-yield programs like Centrium claim to use to generate their lofty daily returns. It's an alluring proposition, to be sure, but as with anything that promises such high rewards, it's essential to look beyond the surface. Understanding the model is just the beginning. Now let's scrutinize its feasibility. Can these programs really deliver on their high-yield promises? We've all wondered this at some point, haven't we? Let's dive into the feasibility of such claims. First off, we need to understand the nature of the crypto market. It's a gold rush out there, but it's also a wild west. The market is highly volatile, with prices swinging wildly from one day to the next. This volatility can be a boon for traders who thrive on uncertainty, but it also means that the value of investments can plummet as rapidly as they soar. Now let's consider the high-yield programs like Centrium. These programs claim to generate a daily income of 2% or more. To put this into perspective, traditional savings accounts typically offer annual returns of less than 1%. So a daily return of 2% is, quite frankly, astronomical. But is it feasible? It's important to remember that in the world of economics, there's no such thing as a free lunch. High returns typically come with high risks. And in the case of these high-yield programs, there's a significant amount of risk involved. You see, to achieve a daily return of 2%, these programs would need to consistently outperform the market day in and day out. This is incredibly challenging, even for the most skilled traders. The probability of consistently achieving such high returns is therefore quite low. Moreover, these programs often rely on new investments to pay out returns to existing investors. This model is inherently unsustainable and can easily collapse if new investments dry up. In conclusion, while it's not impossible for these programs to deliver on their high-yield promises, the odds are stacked against them. To consistently generate such high returns, these programs would need to navigate the volatility of the crypto market, manage the risks involved, and overcome the inherent instability of their business model. High returns come with high risks. What are these risks exactly? Let's explore that in our next segment. In the crypto world, the higher the yield, the higher the risk. This is a principle as old as investing itself. High-yield programs like Centrium are no exception. They come with their fair share of risks that can sometimes outweigh the potential returns. The first and most glaring risk is the potential loss of capital. In the unpredictable world of cryptocurrency, a sudden market downturn can wipe out significant portions of your investment. And with high-yield programs that promise returns of 2% or more daily, the stakes are even higher. The allure of such high returns can often blind investors to the potential for heavy losses. Then there's the risk of market volatility. Cryptocurrency is infamous for its wild price swings. One day you might be riding high on a wave of green, and the next, you could be staring down the barrel of a bear market. This volatility can make it difficult to predict the performance of high-yield programs and can introduce a level of uncertainty that some investors might find unpalatable. And let's not forget the potential for scams. The crypto space, unfortunately, has not been immune to unscrupulous parties looking to make a quick buck. High-yield programs, with their promises of outsized returns, can be a prime target for such activities. It's therefore crucial to conduct thorough due diligence before investing in any such program. Dig deep into the company's background, scrutinize their business model, and ensure that they're operating in compliance with relevant regulations. Lastly, it's worth noting that high-yield programs can have a significant impact on the broader crypto market. They can attract a lot of attention and potentially inflate market prices, leading to speculative bubbles that can burst with devastating effects. In conclusion, while the promise of high returns can be enticing, the risks associated with high-yield programs are considerable. They demand a level of caution and due diligence that goes beyond that of traditional investments. Investing in high-yield programs is not a decision to be taken lightly. So are high-yield crypto programs a reality or a risk? As we've uncovered throughout our discussion, the answer to this question isn't as black and white as one might hope. The allure of high-yield programs like Centrium, promising returns of 2% or more daily, is undeniably attractive. Yet the complexity and volatility of the crypto market, coupled with the speculative nature of these programs, present a considerable risk. We've dissected the claims made by these programs, and while it's true that crypto has the potential to generate significant returns, it's crucial to remember that the market is highly unpredictable. A 2% daily return might be feasible on a good day, but it's far from guaranteed. We've also delved into the risks associated with these high-yield programs. From market volatility to regulatory uncertainties, the potential for loss is substantial. And let's not forget the elephant in the room, the suspicion of Ponzi schemes lurking behind these lucrative promises. The risk of falling into a trap under the guise of a golden opportunity is real and should not be underestimated. The impact of these programs on the overall crypto market is another key point to consider. While they can inject liquidity and stimulate growth, they can also lead to market instability and inflated bubble economies. So, where does this leave us? Should we embrace these high-yield programs as a reality of the crypto world, or should we view them as a risk best avoided? The answer, as with most things in life, lies somewhere in between. These programs can be a part of your investment strategy, but they should not be the entirety of it. Diversification, careful research, and a keen understanding of the crypto market are all essential. High-yield crypto programs can be enticing, but remember, in the world of investing, if something seems too good to be true, it often is. Before we wrap up this in-depth exploration of high-yield crypto programs, it's crucial to underscore a vital point. Here at Tech and Tokens, we strive to provide informative, insightful, and unbiased content to help you navigate the complex world of crypto investing. However, our analysis, discussions, and conclusions are intended to inform, not instruct. We are not financial advisors. Our role is to present the facts, break down complex concepts, and offer perspectives to help you make more informed decisions. But every investment decision ultimately rests in your hands. Each investor's situation is unique, and what works for one person may not work for another. Therefore, always conduct thorough research, seek professional advice, and consider your financial situation and risk tolerance before making any investment decisions. Remember, in the world of crypto and beyond, knowledge is power, but informed action is the key. Stay curious, stay informed, and most importantly, stay safe in your investment journey. In our next video, we'll be diving deeper into the world of crypto, exploring new trends, technologies, and tokens. Until then, this is Tech and Tokens, signing off. Before we conclude this comprehensive look at high-yield crypto programs, we'd like to emphasize the power of community. The crypto world is ever-changing, but remember, you're not alone. Countless forums, blogs, and social media groups are full of people like you, eager to learn about crypto investing. These communities are valuable for sharing insights and concerns. Always verify the facts and consider the source. As we say at Tech and Tokens, stay curious, informed, and safe. Before we end, hit the like button and subscribe for more content. Thank you for watching. Until next time, this is Tech and Tokens, signing off.